Testing. Hey, can everyone hear me clearly? All right, can everyone hear me clearly? Just testing. Can everyone hear and see me clearly? I'm seeing a bunch of participants coming, which is nice. All right, we got Eugene, got Gabriel, right, Henrik. Awesome, right? Okay, Philip, yeah, I can see a message. I can see Roger, Nathan, Eugene. All right, good stuff. Are you guys able to see me clearly? Jamilu, nice to see you, man. Nice to see you. Good to see you here too, man. Right, Rishi. All right, good stuff. Good stuff. Nice to see that everyone's able to send messages through. So this chat section that we have, right, it'll be the main area where we'll be asking questions. All right. Today's session is pretty interesting. It's a pretty interesting session on trading the US earnings report. Right, we are right smack in the middle of the US earnings report. So as most of you guys know that the earnings report is released every quarter, right? So, January to March, April to June, July to September. So the period from July to September, right, is being released now, right, in the October period. Then once October to December, which is the last quarter, right? And then, the reports are released on Monday. No, it's not Monday. I mean, in January, right? So we are right in the peak of the earnings report season, right? I'm going to share with you an interesting approach to trading, one that is not so common, right? Not so common because that's the usual stuff. That's the usual stuff which we'll be touching on a bit. How do you interpret an earnings report? What to look out for in an earnings report, right? And yeah, that is honestly pretty basic stuff they can find on, if you go on Investopedia, you can just read, and a lot of this can be covered up out there, right? Simple enough stuff. Today I'll be giving you a different take on it, right, on how you can actually harness that in trading. Okay, now without further ado, right, I'm just going to begin today's session. What I want to encourage you guys to do is, if you have questions, please ask me right away in the chat section where you see everyone sending their messages, right? I'm gonna send another message over here too. Hello guys, right? This is a place where you can send your messages, and so you can keep track of everyone else's messages too. Okay. Now, before I begin, maybe if you don't mind me asking, right? Where are you guys tuning in from? Right. I can see a couple of you guys where I'm guessing you're tuning in from Singapore or Malaysia, right? Some people, okay, we got Rudy from India, right? I have a feeling that, yeah, a couple of you guys are tuning in from Singapore, Malaysia, right? Yeah, Keith is from Malaysia, right? Nathan from France. Oh, very nice, very nice. Macedonia, right? Trinidad and Tobago. That's nice. Istanbul. Oh, everyone from everywhere, right? Istanbul. What time is it there now? Right, it should be pretty early for you guys, if I'm not wrong. It should be pretty early. Nice to see you tuning in nice and early. Oh, 11, 12 is just right. Just right. Okay. Oh, France is 11 a.m. Right. I've been to France a couple of years ago. Right. Really nice place. I got robbed there. Kidding. No, I wasn't kidding. I really got robbed there. Now, rather someone I wouldn't so much, I wouldn't use the term rob, but yeah, someone like snatch, not snatch would be another word. Um Without me even knowing it, right? Just took my bag, right? But thankfully I got everything back, right? But yeah. That place leaves me some memories. Yes, a 12 hours difference, Roger. Okay. So yeah, pickpocket. Yeah, that's the correct word, right? Today's session, pretty interesting. Let's begin. All right. Before I begin, as always, remember, guys, disclaimer. Everything in this webinar is educational in nature. So nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, especially the earnings report, because things can get like the wild, wild west in the earnings report, right? And I'll be showing you some of the crazy market movements you can expect in the earnings report and how to make sense of it, right? Because usually when the earnings report is released, there's so many things that you can go through, right? And most of the time, the earnings report is actually released before the market opens, right? So if you think about it, the earnings report will be released, like maybe the market is going to open at 8:30, the New York time, right? And the earnings report might be released half an hour before, a couple hours before, right? So what happens is that there's a lot of pre-market trading, right? A lot of stuff happens, a lot of volatility. The market usually gaps up or gaps down in a crazy way. We're going to take a little bit look at it in a bit. I do notice that they tend to gap down a lot, right? And then once the market gaps down, the pre-market trading, right? That's where a lot more stuff kind of comes in, right? An influx of volume of trades. Investors come in to either buy or sell it, right? And that's where a crazy amount of volatility can happen. It's every single day there's a new earnings report. At least during this period, right? There's a new earnings report. I'll be giving you some tips to watch out for, right? Things to watch out for, especially when we use this thing called the surprise index, right? Earnings surprise, how we can make use of it, right? There are some nice little tips I can share with you guys there. Some tools that I use to trade, free tools, of course, right? And how you can try to position yourself to be on the right side of the earnings report, right? To really ride the momentum on it. Okay, so let's begin. Henrik, I can see you're from Denmark. That's nice, right? You can feel free to use the chat section to send your messages on top of the Q&A, because I'm monitoring all the questions over there. Okay, now our agenda for today, right? I'm going to take a quick look at what exactly our earnings report, right? Then we look at how to interpret this, right? Then I go into the interesting stuff. What's an earnings surprise? The surprise percentage, right? How do you trade this? What to look out for, and how you can combine it with technicals to improve your setup. Because what I really want to teach you guys today is not so much the basic stuff, right? The basic stuff you can find on Investopedia, right? It'd be pretty boring. You don't need me to run an entire session through with you, teaching you on that. I'll teach you enough about what to look out for in the earnings report. Then we go into how you can actually put it into a strategy, which is the more interesting thing, if you ask me, right? And of course, let me introduce your host for today. My name is Desmond Leong, right? I run the award-winning research firm, Average Fortune Group, and also the Forex Army, a finalist for 2019, 2020, and 2021 for Best FX and Best Equity Research. Work with many of the major financial institutions out there, but we have a special partnership with Vantage Markets where we're bringing you guys the good stuff, the juicy stuff, the stuff that you don't find on Baby Pips, the stuff that you don't find on Forex Factory, right? Things that can really take your trading to the next level. So I do want to encourage you guys that take this opportunity to ask me as many questions as you want, right? I'll do my best to get to them. I can see your hands are raised. If your hands are raised, don't worry. Just send your question through. I will, if the question is relevant and we have the time for it, I'll be answering right away, right? So the important thing is that we rarely have time at the end of these sessions to ask questions. So take the chance to ask them. I literally have another screen open here, just monitoring the questions, right? So don't hesitate to send them through. Okay. Now, let's begin today's session. All right. Let's begin today's session. Let me just move my stuff around a bit. All right. So I can see the questions more clearly. All right. So what exactly are earnings reports? Right. So an earnings report really constitutes of 5 things, right? One is the management discussions and recommendations. They're the little bit of market risk disclosures, right? So the reason why they're the market risk disclosures is, they kind of frame things in context, like, hey, this is what's happening in the market now. These are the risks that we're seeing. Balance sheet, very black and white, right? This is, the assets and liabilities of a company. Income statement, very important, because it's in the income statement, that's where we find a lot of the key numbers, right? That we'll be taking a little bit of look into later. Cash flow statement, more important but not that important, if you ask me, right? Because cash flow statement, just seeing how much cash people need. Companies do need cash. Cash is still king, to survive. Can you pay your vendors, right? Important stuff, but if you think about it, is it really necessary to use this to trade? Not necessary, if you ask me. Let's use a little bit of filtering. All right. Company's earning report is very good to gauge its performance and financial position, right? If you're using it more for long-term trading, right? There are a couple of different kinds of traders, right? Let me see if I can use my mouse over here. I'm going to just draw this and see if I can draw this. Oh yeah, I just use this thing here, right? So there are a few different kinds of traders, right? We have the short-term traders, right? We have the medium-term traders, and we have the long-term traders, right? Different traders hold the trades for different periods of time. So a short-term trader, you're usually a scalper. You hold it anywhere from maybe like a couple of minutes, a couple of minutes to maybe a day. All right. If you're a medium-term trader, you tend to hold it for a little bit longer. I'm grossly simplifying it here because you can actually talk about scalping, day trading, swing trading, position trading, right? But a medium-term trader, looking for anywhere from a couple of days, right? A couple of days to a couple of weeks, right? To a couple of weeks over here. Okay. Long-term traders, you're holding the position for the long term, right? So you're looking anywhere, from 1 week onwards, maybe to a couple of months, right? So long-term trader, depending on your trading approach, how you're going to, the kind of information you want to get and use from the earnings report are two completely different things, right? A short-term trader will be probably want to look at this thing. What's the difference between the EPS, which means the earnings per share, right? What's the analyst forecast versus what's the actual earnings per share, right? If they deviate, there's this thing called surprise, right? Surprise percentage. It's like how much by surprise did the company catch investors, or rather catch the market, and that's where the market can react. So short-term traders, a little bit more towards that, maybe even medium-term traders, right? Long-term traders, you're going to look at stuff, because a long-term trader, you want to really dig into the earnings report to understand it a little bit more, right? Understand what are the profits, the losses earned by the company, like what's the sales volume, what's the revenue, what's the profit margin, right? And from there, you can make a better gauge on whether there's this thing called year-on-year growth also, right? We should be touching on the next slide, right? And from there, you can determine whether, it is outperforming, right? It's outperforming itself for the next year. Oh, there's an auto subtitles thing I just realized. That's cool. So yeah, there's sorry, I just lost my train of thought. I just saw the subtitles thing, right? Okay, yeah. So with more data, then you can decide, especially this thing on year-on-year growth, right? So for example, why do companies use this thing on year-on-year growth? Right? I'm just going to show you. Do I have the slide here? Yes. This thing called year-on-year growth. Let me just erase this thing. I'm skipping ahead. Just to take a look at this thing, right? Because I'm trying to explain the long-term for long-term traders how to use this, right? So year-on-year growth, this thing over here, right? You kind of want to measure, okay, last year versus this year, right? Last year versus this year. Last year we were in Q1. This was how we were performing. We were gaining 4%. Q2, 10%. Q3, 25%, how we expect Q4. So if you look at the performance over here, we naturally realize that year on year, the company is growing, is performing better. Why do we use quarter by quarter, right? A very important point, right? It's because the market behaves differently quarter from quarter, right? If you think about it, right? If I'm a retail shop, right? I'm a retail shop and I specialize in toys, especially in toys and gifts, right? I would see the most amount of growth in Q4 because that is where the Christmas, season comes, the season of gifting, right? A lot of people are buying gifts, right? People are getting their year-end bonuses, right? They got more money to splurge and stuff, right? So in Q4, my numbers might be like maybe 350,000. Right, but if you compare something like that with the results of Q1, it looks like it's performing a lot better. But that should not be the case because you're comparing during that season. Q1, Q2, Q3 might be nothing for this company, but Q4 would be the heavy hitter, right? And that is one of the reasons why you need to keep a lookout for this thing on year growth. Don't just look at it like, oh, we made money from last quarter. Last quarter, we made 208,000. This quarter, we made 264,000. That's a wrong way to compare it, right? Because companies' performance differ from quarter to quarter, right? So what you always want to do is to compare the previous year, right? Year-on-year growth. One important thing to take note of, right? Especially if you're investing for the quarter, right? You're investing maybe a little bit more long-term. You want to see the general health of the company, right? Year-on-year growth, right? Is one of the key things that you want to look out for. Okay. Now, let me just erase my drawings over here and come back to here. So this is, so I can talk about when the earnings reports are released, right? And this was what I was mentioning to you guys, right? So in the first quarter, right, January, February, March, this is the first quarter. At the end of that, it gets released in April, right? April, May, June gets released in July. July, August, September is now being released in October. So it's usually released in the month right after the quarter, right? It can't be released before because you don't know how the company performed, right? So this is where, when the month of October, a lot more trading activity happening around the different companies, right? And we can actually dive into it and see how we can trade it, right? Of course, you add up all the 4 different quarters. That is where you get the annual report, right? This is the annual report over here. But in today's session, we're going to look at the earnings report. How do you see when they're released? What is being released, right? My personal approach to trading it, my personal approach to kind of monitoring it, right? And some perhaps juicy strategies that we can use. Okay, I see another Q&A coming through. Demand on the price action or something. Yeah. Trung. So Trung is asking me to take a look at some of the price action of some of the major stocks for this week's earning dates. Yes, I can, and I'll be showing you how we can apply some of it, right? Remember, earnings report. If you guys know about non-farm payroll, right? Non-farm payroll is like the first Friday of the month, right? Where the US unemployment data is released. Crazy amount of activity happens then, right? There's so much movement, right? The euro dollar just goes up and goes down crazily, right? You can imagine the earnings report is like that, right? The earnings report is almost like that, but on a stock, on a company level, right? Based on the projections, everyone's expecting to perform a certain way. The volatility, the movement happens when it differs from the expectation. It is boring when the market behaves the way that you expect it to behave, right? There's no surprise there. Investors were like, I knew that, right? But if it behaves differently, that is where there's an opportunity, there's a mad rush, right? And how do you play your hand over there really determines whether you land up on top or below, in profit or in losses. Okay, so let's go move on from here a little bit. Okay, so let me clear this. Oh, let me clear this again and come down to the next slide. Just give me a second. My things everywhere here. Yes, there we go. Right. So these are the few key things that you kind of want to look out for, right? When you're trading. I mean, broadly speaking, in earnings report, right? You want to look at the revenue, right? So revenue, it's really simple. A simple way of saying it is how much money did they make? Okay, don't confuse that with profit. Profit is the profits that they make. Money is, of course, before they factor in stuff like the expenses, right? Which might take out a lot of stuff, right? You can earn a lot of money, right? But if you spend if you earn $100 of revenue, but you spent $110, right? Your net profit is -10, so you end up losing money. So revenue is not the only thing that determines the. It's an important thing, right? Because it's important to know that a company is actually, there is revenue, is actually making money, right? The worst thing is that, a company has no revenue but have a high expenses. That is terrible, right? But the company has a healthy amount of revenue, right? And then look at the expenses, right? Then you can, come up better story. Profit is definitely one thing to look at. So profit comes into it's not necessarily net income, but profit is, revenue minus cost, right? Is your profit, right? So like I mentioned, you can have a lot of revenue, but you have a lot more cost. That is where your profit, your losses. And when your losses, that's where people start to worry. Earnings per share, one of the key things that we'll be looking at today, earnings per share, right? Grossly oversimplifying it, right? But earnings per share is one of the key things people look at when it comes to trading. Do take note, my only caveat, there's a caveat here, right, is that earnings per share can be manipulated. It can kind of be manipulated, but sometimes people don't really care. Investors don't really care because there are so many earnings reports that are released every day, right? And earnings per share, if you think about it, what does earnings per share mean, right? First, you determine your earnings, right? Then you have your earnings over here, and then you divide it by the total amount of shares that you have. All right, earnings is a little bit hard to manipulate. You can manipulate earnings, but it's a bit tough. Shares is very manipulatable, right? You can companies can buy back their shares, right? So maybe if they have like 1,000 outstanding shares, right? They have 100 outstanding shares, they buy back half, right? Then becomes 50. So initially, if their earnings was 50 over 100 would have been 0.5, right? But then because they buy back half of that, right? 50 over 50 becomes 1.0. So their earnings per share looks fantastic. It looks like it doubled, right? So it's a little bit, it is worth knowing that, companies can buy back their shares to manipulate these earnings per share. So it's important to look out for such figures, right? But one of the key things that many traders look at when they begin trading earnings report is the EPS. All right. If you're a little bit long-term trader, you look at year-on-year growth, see how's the company performing. If a company is doing well, logically, it makes sense that growth improves year over year, right? That is one of the key things you look at. Of course, unless the company does something different, right? The company is doing a restructuring, right? Company spent a lot of money in this quarter compared to last quarter on R&D, right? Was there a big acquisition, right? Things that might mess with the numbers a bit, but year-on-year growth, usually is a pretty good gauge on like the performance of the company. Super important thing here is analyst estimates, right? Because the nice thing about these earnings reports is that there are many analysts out there who are just estimating, right, what the earnings per share will be. That is what they do. That is what they entirely do. They just look at the earnings report and figure out how well a company is doing, right? And they estimate the earnings per share. They just some of them even go down to the company, see how they're doing, write long reports. There's so many of these out there, right? And these are trusted people, right? These are trusted people. So if everyone is saying, I'm glad someone found my analogy about the NFP to earnings data. Nice, thank you very much. Right, and that's one of the benefits of being a FX trader and also a shares trader. You can really look at a lot of the similar things that are happening, right? Everyone is really just trading the markets, trading different expectations that the market produces, right? And so how we position ourselves on it, right? So analyst estimates, one of the things I'll be showing you later, and guidance, right? Forward guidance, how's the company? Sometimes the forward guidance is a little bit more important than even the earnings per share, right? Because you can have a really good earnings per share that outperforms the analyst, but the forward guidance says that, hey, we're going to cut back a bit, right? And that's where the performance doesn't do very well. Now, there's this thing called earnings call that we want to take note of. Okay, so this usually happens after the news release, right? So it happens maybe on the day itself, might be the day after, right? So that is why sometimes when you look at a chart, right? When you look at the chart, right, the earnings report comes out, it booms, it goes crazily, then suddenly it shoots down in another direction. This usually happens during the earnings call, right? That is my observation, right? Because the initial reaction, you're just looking at it purely on numbers, you can't really figure out that much. You just need to react so fast when the market, when the earnings report comes out. And then the earnings call is where management, basically come in and they start sharing their insights with the investors, with the analysts, right? And say that, yeah, we perform fantastically, but we should not be expecting this, because month after month, because in these past few months, because of COVID, there was an uptick in our services, right? So it could be a one-off thing. right? And when that is explained, it suddenly brings context to the previous numbers. Well, those numbers previously were amazing, right? Those numbers previously were amazing, but with this new context, right, price just plummets, right? So that is the thing why sometimes you notice price goes one direction and it goes in the other direction, right? It's not because it's just going up and down, right? Usually it's because of the accompanying earnings report. Sometimes it happens on the day itself, sometimes it happens on the day after, right? But it usually happens. Okay. Now let's start going into some of the other slides, right? Right. So what is a percentage surprise? One of the key, okay, so I've explained quite a bit about the earnings report to you, kind of how to read it a little bit here and there. What I want to share with you guys is that if you really want to dig a little bit more into, just the how to interpret revenue, year-on-year growth, earnings per share, EBITDA, all this kind of stuff, go to Investopedia. You can read it. We got half an hour left, right? I want to focus the time on sharing, some of the juiciest stuff on how I put all this together into a trading strategy, right? Because that is where we make money, right? That's where we make money, right? So, okay, so where do you go to, right? Is this place called nasdaq.com/market activities and earning. How do I copy this, right? I'm going to type it out over here, right? nasdaq.com/market activities/earnings, right? This is a page that you can go to, right? And what I like about this page is that it actually shows you the all the earnings reports that will be released on the day itself. And for the previous days, right, actually shares that, all right, you want to see this thing called EPS, earnings per share. And maybe I got my marker over here. So what you look for is earnings per share. This is the actual earnings per share that the company released, right? This was the consensus EPS forecast. That means this was what the analysts were expecting, right? This is the number of estimates over here. So this was number of analysts that were estimating the EPS price, right? And of course, the big thing is when there's a big difference between what the EPS is. For example, for BlackRock, 9.55 versus the 7.70. Now, remember, a percentage surprise can be positive or negative, right? If this case, right, when the forecast, right, is lower than the actual earnings per share, it's a good surprise, right? The market is like, awesome. That's good news, right? The surprise is positive, right? On the flip side, right, if your forecast is higher than the actual earnings per share, then suddenly it's not a nice surprise. It's a nasty surprise, right? It's a nasty surprise, right? And that's where, you get something like negative 60.48, right? And the performance falls off a cliff. So we got a question saying, what's the average percentage of volatility increase for earnings date? Hard to say the average because it really differs from company to company, right? For example, right, the surprise here, right? Walgreens, right? We can take a look at it later, right? Earnings per share is 0.8, right? The forecast is 0.78. It wasn't much of a surprise. It's not going to move the market much, right? It's not going to move the market much, but usually there's a fair amount of volatility that is happening, right? If you want to consider it from an options perspective, right? Implied volatility, that's a whole nother topic which we can talk about for a long time, but that's not our focus today, right? But there's definitely an increase in volatility that can consider. And if you trade options, yes, it actually is implied in the option pricing already. Okay, but I do want to let you know one more important thing: number of estimates, right? We want to ideally look for not only number of estimates, but also the market cap. Okay, the more the estimates there are, right, the better the the more accurate essentially the EPS forecast, right? And the more people that will be looking at it. Okay, so if you have a number of estimates and it's only one, right? Usually, it's not going to be, even if the surprise is huge, it might not move the market that much, right? It's usually when there's a lot of people, a lot of analysts forecasting this particular EPS, and the actual one differs a lot. That is where it actually moves quite a bit. right? Market cap is a big thing that we want to consider because we want to look at the big market movers, right? We want to look at the billion-dollar companies, right? If this is like 331 billion, billion. So you want to look at the big players, not the small players, okay? Because small players, there's a lot less liquidity. Less liquidity, there's not as good bid and ask prices. Not as good bid and ask prices, it doesn't benefit us traders, right? So a lot can happen if there's not enough liquidity. So we ideally want to look for the bigger market cap. You'll notice that I actually sort it based on the market cap downwards. That means I always look at the biggest markets first. Okay, how does this look like, right? How does this look like when we load the website? So that is where I'm going to pull up my chart over here. Where's my chart? Earnings calendar. Here we go. Right. So this is the earnings calendar. Right. I'm going to show you. You can actually go market activity, right? Daily earnings surprise, right? And then of course, right, this there's nothing today, right? Maybe Wednesday. I'm sorry. Like these are the no. There's another one. Earnings report. Yep, this is the earnings report that we're looking at. Earnings calendar, right? Earnings calendar, right? So Tuesday, today, what can we expect with the reports later, right? So you notice that yes, there's a consensus, these are the forecasts, right? There are a few ways that you can sort this, right? And of course, I personally like to sort it based on market cap. Big one later is Johnson and Johnson, right? Johnson and Johnson, right? We have a what do we call it? We have forecast. Let me pull up my chart over here for you. Oops, is this the one? I just need to pull up TradingView. So the website I use to analyze all my all the charts when it comes to trading is actually this site called TradingView, right? There we go. Close it off. I'm going to my earnings report, right? US earnings list, right? There are a few that I'll be showing you example later, right? I'll be showing you an example later. But in this case, let's go to Johnson and Johnson, right? Johnson & Johnson, J&J, right? So J&J on the New York Stock Exchange, be sure to pick the correct one, right? Hey, Dianity, right? Nice to see you tuning in, right? And okay, right? We have the earnings report, which should be released very soon. So what I like about this, right, is that you can come in here and you can, on TradingView, you can click on this thing and you can see what is the forecast. And if you look at it very closely, when you click on it, this is the exact dotted line. This is the time when the forecast will occur, right? And what we can expect with prices when it occurs. Now, there are a few rules I have when it comes to trading, right? Let me just find my charts over here. Okay, let me show you what happens first. Okay, for example, BlackRock I mentioned earlier, right? BlackRock, right? The forecast was 7.7. The earnings was actually 9.55, right? So the performance of it was, there's a 24% positive surprise. What happened from there is that you can see price, the market gap down, the beginning of the market, pre-market trading hours, right? And then it shot up very nicely from there, right? So it's not only the initial, so this is the 1 hour chart, right? So usually have enough momentum to take it through the rest of the day. Okay. Another example, we're trying to show you PGR, right? So PGR, same thing, earnings report release pre-market trading hours, right? It pushed prices all the way down. But at the same time, this is the interesting thing about here. Even though you're negative 60%, right? You would expect people to kind of push it further down, right? But what happened immediately after is that prices actually retrace, bounce up nicely before further dropping down. The reason for that is that, let me just take out my handy dandy drawing tool, right? This is the Wild Wild West. A lot of crazy stuff happens over here when prices, get down. All right. It's an interesting point, right? You think about BlackRock have a positive, BlackRock has a positive kind of surprise. It goes down and it goes up. PGR has a positive surprise. It goes down and it goes up. Right. So that is the thing with the earnings report, right? It's the Wild Wild West. It's just how the markets react to it and how you're gonna make sense of it, right? One of the key things which Zoran, I'll answer your question in a bit, right? So one of the key things which I actually focus on, let me just clear my charts over here. One of the key things I actually focus on are these things over here, right? What is the, let me find my drawing tool. What is the momentum of the market, right? What is the momentum of the market? Where is the breakout? Where is the pullback? Okay. So in this case, right, the earnings report was over here, right? It was about here. Notice I don't look to get in right away, right? I look for this thing called a horizontal graphical level, horizontal overlap, horizontal pullback, right? You want to find the resistance level. In this case, I found the resistance level over here. And it also looked like something like either a triple bottom, right, or a double bottom kind of formation, right? Because the earnings result was good, I'll be showing you this in a live example later, but because the earnings report was good, it gave it that little bit of momentum to push it upwards, okay? But the important thing to take note of is that you never ever just trade it right away. Don't look at them, give the earnings report a little bit of time, right? Give the earnings report a little bit of time to calm down a bit, right? Because you want it to come down a bit before you get in, right? Because if you decide to jump in right away, you're in a very charged, well, what's the word for it? You're in a very the energy, right? Is there's a lot of energy, there's a lot of emotionally charged kind of environment, right? And you are in less control of it, right? If you think about it, do you make better decisions when you are angry? Do you make better decisions when you are angry? Or do you make better decisions when you are happy? Or do you make better decisions when you're neutral? Right? Angry is when you make the worst decisions, right? I mean, you're like, dart it, throw something, hit someone, right? Regret, right? So angry is something. Happy is also a dangerous emotion, right? Meaning that you can feel super happy, but it gives you a false sense of confidence. All right. You want to trade in a neutral situation, right? And when the earnings report is released, not there, right? The earnings report is over here. When earnings report is released, that's where a lot of people are emotionally charged, right? Getting in, you got a lot of people willing to put a lot of risk into getting in early before the market. So that's what the pre-market is. The pre-market is you can get in before the rest of the market moves, right? And naturally, you're gambling in some sense, like you're betting that if it's a bad earnings report, price will continue to go lower, right? Imagine those people in the previous example, they expected prices to get down, so they were selling like crazy. And when the market opens, it shoots up. You lose a lot of money very fast, right? So emotionally charged, right, is usually a bad place to be trading. You're a lot less in control of a situation. So an approach I take is that I take a step back when I'm trading. Especially the kind of earnings report, I would stay away from the market. Let the market kind of fight itself out first, right? Let people trade, let people curse, let people celebrate, right? But once the market comes down a bit, then I look at it objectively from a technical analysis point of view. What is the momentum of the market, right? Is there a key breakout? Is there a chance I can get it on the pullback? That's the key things I look at. So in this case, right, the earnings report gave it a chance to break out, pull back over here, and then take off in that direction, right? So these are the kind of things that you want to look out for, double bottom kind of formations, triple bottom kind of formations, things that will kind of put the market, put the analysis in your favor with riding on the, on the good, riding on the momentum that a good earnings report can give you. Okay, now let me show you some examples. Okay, let me show you some examples. Okay, now let's go to let me erase all this. Okay, let's come down to here, right? So we have a big earnings report coming out today, which is Netflix. Okay, Netflix. So let's pull up Netflix. Netflix. Now, one of the key things that I want to highlight for Netflix is that you first look at it from a technical analysis point of view, right? I usually look at the 1 hour, but you can look at the 4 hour too, right? Immediately, you notice that on the 1 hour time frame, it goes without saying that there is a big resistance level over here. There's a super big resistance level here. There's a big market gap, right, that occurred over here. Big market gap that occurred over here. And price has never been the same since then, right? Let me just pull up my brush. Okay, right? We can see that price came up once, come down, up once, down, up one, down, up one, down, up one, down, up one. And it's right at this level, right at this level. Okay. Earnings report coming out really, really soon. Exciting, juicy stuff, right? How are we going to trade this? How are we going to trade this, right? So the key thing I want to take note of, right, if you zoom out on the higher time frame, is that yes, we are in this level, and that's the benefit of going to higher time frame. This level stretches all the way back to this, to not only a normal level, right, and it goes all the way back to 2019, where this level was tested. Okay, if you look closely, what's the kind of pattern that we're looking at over here? This could be something like a cup and handle pattern, right? So it might be breaking out from here. A lot of that hinges on the earnings report, right? A lot of that hinges on the earnings report. So two things can happen, right? If you have a good earnings report, you're going to see price do a nice little shoot up, right? And with the momentum here, you take the trade, okay? Now, what you want to do, right? What you ideally be what you kind of want to be looking at is that if there's a good earnings report that's released, what is going to happen is that in pre-market trading hours, prices are going to probably gap up crazily, right? It might gap up all the way to here, right? Maybe over here. What you want to do is wait for the pullback, right? They're going to gap up. The market will there might be a lot of activity push prices up. Then, there'll be usually, right, what I feel is the better entry price. Wait for, this is clearly a key level, right? It's a key level. So you kind of want to wait for markets to pull back a bit and then look to get in to play the, with the momentum that we have, right? A short-term momentum, cup and handle formation, and, good earnings report, kind of all, nudging it upwards, right? You're going to have enough momentum to take it forward. You don't get in here because remember, when you get in right away at a pre-market, or maybe even like when the earnings report is just released, right? Crazy amount of volatility, crazy amount of emotions, right? Very emotionally charged, angry, happy people trading, right? A lot can go wrong over there, right? If you want to take a safer approach, get in on the pullback. You identify this level as a key level, right? So try to get in on it to play to continue playing the good news release, right? The good EPS, right? And see how it performs. Now, you're trading the surprise. You're not just trading the EPS, right? So what I mean over here is that there's an EPS forecast. You're looking for a positive surprise, right? What does a positive surprise look like, right? A positive surprise, when you go down back to the previous one, even back to one more, right? A positive surprise is like this. Wells Fargo, right? The EPS forecast, 1.09. There's a decent number of analysts that is forecasting it, right? And the actual one that comes out is 1.30. So it's a 19% positive surprise. Wells Fargo, right? Let's take a look at Wells Fargo, WFC. How did it perform on the news release, right? There we go. Right now, I can't really click it here. All right, this was the earnings report. Let me see if I can zoom in a bit, right? This was the earnings report. You can see at the moment, price kind of shot up a bit. Okay, as expected, sorry, it's a negative earnings report. Wells Fargo, weird. Yeah, it's a positive surprise, right? So yeah, in this case, this is the percentage surprise that you're trading. It's a positive surprise. How are you going to trade that? Well, let's take a look at it, right? Wells Fargo. What are the three questions we have? What's the overall momentum, right? The overall momentum of Wells Fargo is, well, in the middle of nowhere, honestly, in the middle of nowhere. What is my second criteria, right? Oops, sorry. My second criteria over here. Where's the breakout and where's the pullback? Okay, let's go into here. The breakout, which I foresee is going to happen, is likely over here. This is a big resistance level. Okay, if Wells Fargo, if you ask me, if all the positive surprise of the earnings report, right? If it's not enough to help you break up beyond this, then it's a warning sign, right? It's a warning sign that price is going to reverse from there, because it is a key resistance level. Price bounce from it, react, right? So even with all the good news that the earnings report is bringing it, if it is not able to use that momentum to break it up, break beyond this level, that is where there's a chance that price will likely reverse from this level. This is like a professional analyst's opinion on when they're trying to assess like the performance of like whether this resistance level will hold. Okay, let's look at a couple of others, right? So we have which one was I looking at? I think I was looking at 11th October APLD and AZZ. So AZZ over here. Give me a moment. Okay, AZZ. Okay, AZZ's earnings report was negative 31% surprise, right? That is why you can see that the market, right, the earnings report over here, the market gapped down a lot. Okay, the market has gapped down. What are my few questions again? What is the overall momentum? Let's zoom back a bit, right? The overall momentum of the market, at least you can see, is kind of going down, right? It's going down. It's clearly going down, right? We go into the 4-hour charts. I usually go into 1-hour charts, right? You can see prices going lower, 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 lower. Now, so this was the level where it broke out from. Okay. Sometimes if you want to see things closer, clearer, you can change a bar chart to a Heiken Aishi chart, right? So it can help you see the movements of the market a little bit better, right? And it's especially useful in these kind of charts where there's less liquidity, and that's the danger, of course, with less liquidity. The chart doesn't look very nice. But if you change it to Heiken Aishi, you might be able to see a little bit more information about it, right? And if this is the breakout level, okay, there's clear bearish momentum that's kind of pushing prices lower, right? Bearish momentum is kind of pushing prices lower. The pullback that you're looking for is over here. This is a pullback. It also happens to coincide with a nice, if you guys know, Fibonacci, maybe 61.8 or 38 slightly above. So not very nice Fibonacci. Nice little bit of resistance there, right? So with the bearish momentum of the earnings report, when it slowly starts to sink in that, wow, we had a terrible earnings report, right? Prices are going to go lower, right? Then that's where you kind of look at this to get into further play the momentum down, right? It's very risky to play the initial move, right? The initial move happened. Everyone who got in, right, who got in at the earnings report after the move happened, they will be in a little bit losses now if they were selling right away, because the market is recovering, right? The market is recovering, and in terms of technical analysis, this is what we call the key pullback level that you want to pull back to. Once it's over here, right, you sell and then you continue playing the momentum of the market. Remember, you need the momentum of the market in your favor. You need the earnings surprise in your favor. With these two things in your favor, right, it really helps you get on the right side of the market. Okay. The other one that which I want to look at really, really quickly is this, right? I think it was the APLD. APLD, right? Now this is what I'm referring to. APLD had a positive surprise of 33%. So it did fairly well, right? It did fairly well. This was the this was where the earnings report was released. Okay, right at this level. Right, I'm just going to draw a vertical line right at this level over here. This was when the earnings report was released. Now, let's go back to establishing. Where was the resistance? This was the resistance, right? Clearly, this is resistance. Price bounce off once, price react multiple times, right? With the momentum of the earnings report, price manages to close above this, right? And that gives you the momentum to play prices above. But you can only look to take the trade, when price closes above a key resistance level. It does help that this looks like a little bit of a triple bottom or a little bit of a double bottom, right? And of course, with that, what you want is price breaking out, price having that little bit of bullish momentum that comes with the breakout. Earnings per share have a positive surprise, so there's a nice little bit of, imagine you're swimming against the, swimming in the sea, right? If you're swimming against the waves, right, it's, you're always swallowing water, right? It's always very tough. But if you're swimming in the direction of the waves, it's a lot easier, you just flow and flow and flow, right? So that's where we want to be when we're trading, right? We want to be in the momentum of the market. In this case, right, there's a little bit of the, triple bottom, double bottom kind of formation, nice little breakout. There's a lot of bullish momentum pushing prices up. And then there's a positive earnings report, even pushing prices up. Once this happens, you play the move all the way up to the next big resistance level, right? In this case, I might have just played it to this level over here, right? This was another resistance level because I'm a short-term trader, right? But this is an example. Okay. Abraham is asking if we can have comparisons on the currency explanation trading. That's more of non-farm payroll because, like I mentioned, earnings report is kind of similar to non-farm payroll, big news item, except of course it's once a quarter. In this case, non-farm payroll is once a month. You're gonna use that news. You're gonna use the momentum of that news, to take a trade to the next level. But you don't just blindly buy. You don't just, in this case over here, right? When the earnings report was released, right? When the earnings report was released over here, you don't just blindly buy because when you buy, there's such a big resistance over here, right? It's so dangerous to just blindly buy, right? You need to wait for confirmations, especially when it comes to earnings report. It's a very, very risky game. You wait for this confirmation, price breakout of a key resistance, price. It's a nice little chart pattern. It's an added benefit if there's a chart pattern, right? There's a positive earnings report that is pushing you up, right? Then you can play to the next resistance level. Now, the approach I take is to play from one support to one resistance to one support, right? There's no reason to kind of play all the way up to here. Why is that the case, right? Let me put a really simple analogy for you guys. A weather forecast, okay? If you're planning to go to the beach this weekend, right? You look at the weather forecast. Now, if you're planning to go to a beach, maybe like next weekend, you look at the weather forecast and it says that it's going to be sunny, right? You're going to be wondering to yourself, well, I'm about 10 days away. I wonder how, actually not 10 days, about like 12 days away. I wonder how reliable the weather forecast is, right? It's going to be sunny, but a lot of times, we've trusted the weather forecast only for it to disappoint us. All right. So when something is further away, it is further from your locus of control. If you see a weather forecast that says tomorrow is going to be sunny, you have a fair amount of confidence that, tomorrow might be a sunny day. You still have a little bit of doubt in your mind that, okay, sure, tomorrow's sunny day, not sure how much I can trust it. But you see a weather forecast where it says in the next 1 hour, it's going to rain, right? With that forecast, right, then you'd be like, all right, I can see that the sky is a little bit dark, right? I can, the weather forecast is the next 1 hour. I have the confidence, right? Because it's within my locus of control, right? So it's the same thing when it comes to trading. You want everything to be in your locus of control, right? When the market moves from here to here, a lot of things can happen in between. Donald Trump might even be the president again, right? And a lot of stuff can happen then, right? So something that is forecasted further away is, it reduces your control, over how accurate you can forecast the prices. And that's why in this example over here, when price makes a breakout, I would probably play it just to this level over here, this resistance level, because I know that it's within my locus control. Nothing, it wouldn't even last until the end of the year where the next quarterly forecast is going to be, next earnings report is going to be, right? Just playing a short movement. This kind of trading strategy, right? It's called, there's a certain term to this, breakout trading, right? We actually do cover this in our other webinars, right? When we look at more like how we can apply the different kind of trading strategies in trading, right? I only impulse trade during high volume, right? Yes, you try to avoid impulse trading during news, because news is where a lot of emotions, very charged up. People are emotionally charged. All right. But I'm glad to see quite a number of you guys stayed to the end, because we do have a nice little bonus, right? I didn't mention it previously, but I might as well give it to you now. I'm going to paste the link for you guys, right? I'm going to paste the link here. It's a deposit bonus. If you click on this, right, this is a deposit bonus that Vantage currently have, right? So you can get up to 20,000 deposit, and they give you up to 1.5 times, right? If you're here, right, it's a good thing to have, additional leverage, especially when you're trading stocks, which, have different margin requirements, right? So if you're here, right, good for you. That's a nice little deposit bonus. To open a live account with them, right, please use this link, which they have provided me. I'm going to send it to you guys too. If you click on it, right, it just takes you to a very nice, simple a registration form. Open live trading account over here in just 5 minutes. Personally, right, a lot of earnings reports that's going to come out in the next few days, right? It'll be a pretty fun time to trade them, but my recommendation, not say my recommendation, is to take it slow, guys, right? You got Netflix coming out pretty soon, so let's see how soon Vantage can really hold true to opening their account. Can it get you ready for the Netflix news release later today? Interactive Brokers Group, super duper nice. Hasbro, United Airlines, very, very interesting United Airlines, because there's a lot of flights that are being resumed in the last few months, right? Just a lot of things that you can really, really look at over here, right? What do we have tomorrow? Bam. Tomorrow, any big Tesla, holy smokes, Tesla news release tomorrow. Crazy stuff can happen there too. Okay, crazy stuff can happen, right? If you guys are interested, get in on it. Go open your live account. Go get that bonus you have, and let's see what happens. Okay, guys. But what I'd like to let you know is that we've come to the end of our webinar, right? End of our session. Thank you for staying with me all the way, guys, right? Tune in every Monday, Tuesdays, and, actually every single day of the week, we have webinars here at INFX, not at Advantage Markets, right? And, you can just tune in, right? And usually it's me, sometimes it's me, sometimes my other analysts around here, right? You can ask us questions every Monday. We cover the markets, what's happening in the markets for the rest of the week. Every Tuesdays, sessions like this where it's educational. And every Thursday is a trading strategy clinic where we help you diagnose your trading strategy. Come in here, ask us questions like, what do you think about my moving average strategy? What do you think about my Fibonacci strategy, right? And we actually help you diagnose it. Okay. Now, guys, I've come to the end of my session. Thank you very much for staying all the way. Have a good trading day. Have fun trading the US earnings. Have fun trading the US earnings report, right? Remember to exercise proper risk management, use the stop loss, use the take profit, right? If you're really going to trade during the exact news release, a lot of stuff can happen. So please be careful. Okay. Thank you very much, everyone. See you guys next time. Bye-bye. All right, guys. Right. Okay, I can see. Bye, Alicia. Bye, Sher. Bye, Eugene. Right. Nice. Hope you guys enjoyed today's session, right? Bye, Keith. No worries. Right. Bye, Zoran. I hope to see you in the next future sessions. Thank you, Eugene. Glad you found it nice. Nice session today, right? I hope you guys, take a different approach to trading the US earnings report. Don't need to pour through the reports, right? Good stuff they can use. Okay. See you guys. Cheers and peace out, everyone. Peace out. Adios. Bye-bye.